Topic 1. Brief summary, 3 to 4 lines. Geopolitical developments around Iran dominate headlines and have sent shocks through oil, gold, government bonds, and equity markets. Markets swung on mixed signals about possible talks between the US and Iran, leaving uncertainty about supply through the Strait of Hormuz. Fertilizer supplies and food security risks are rising as shipping disruptions threaten key agricultural inputs. If geopolitical uncertainty persists, energy and food price pressures may continue to intensify. Detailed content, verbatim summary translated. Core event. Markets reacted sharply after US President Donald Trump said the United States and Iran are in talks. The New York Times reported the US delivered 15 peace terms to Iran via Pakistan, but Iran denied direct negotiations and issued counter-proposals, producing mixed signals. Mediation attempts through Pakistan and the possibility of US troop reinforcements are occurring in parallel, so uncertainty remains. Oil, energy. News of talks briefly pushed international oil prices down, Brent around 99 to 100 per barrel, WTI around 87 to 88 per barrel, moves on the order of 4 to 5%. But the risk of a supply shock remains high because any closure of the Strait of Hormuz could disrupt Middle Eastern crude and LNG flows, keeping oil volatility elevated. Bonds, equities, gold. US Treasury yields fell, 10-year around 4.32%, 2-year around 3.88%, as safe haven demand and rate expectations adjusted, and US and European stocks rose temporarily on diplomatic optimism. Gold also moved higher amid the uncertainty. UK gilts. Gilt yields jumped more than other G7 assets, rising by roughly plus 80 basis points relative to before the events, with 10-year yields climbing into the 5% range, reflecting worsening concerns over Britain's fiscal, inflation, and political risks. Fertilizer food risk. The Strait of Hormuz is a key route for agricultural fertilizers, especially nitrogen fertilizers and urea, so disruptions would hit volumes. Urea prices that were $499 per ton pre-war were observed to surge to around $700 per ton, indicating 20 to 50% rises in urea, ammonia, and related products. An estimated 30% of globally exportable fertilizer supply could be affected, raising the risk of fertilizer shortages, lower crop yields, higher food prices, with emerging and low-income countries particularly vulnerable. Market mechanism. Firms such as Goldman Sachs assess that current price moves reflect a geopolitical risk premium more than fundamental outlook changes, and because the timing of any normalization of Strait of Hormuz transit is uncertain, banks model a gradual reopening within April. Short-term volatility and upside risk may persist. Summary conclusion. Headlines are being driven by mixed diplomatic signals on the Iran situation, talks possible versus denials, and this is rapidly shaking oil, fertilizer, bond, equity, and food markets. Unless geopolitical uncertainty eases, energy and fertilizer supply shocks and higher prices, especially in food and energy, are likely to continue. Topic 2. Brief summary, 3 to 4 lines. The tech and AI sectors face heavy churn. OpenAI raised an extra $10 billion while cutting consumer products. Meta confronts layoffs and a roughly $375 million legal penalty while becoming an early customer for ARM's new CPU. At the same time, educators warn that rote skills will be made obsolete by AI and urge training in creativity and critical problem-solving. Detailed content, verbatim summary translated. Overall context. The AI and tech sector is undergoing rapid restructuring, cost-cutting, and legal regulatory battles. In education and child rearing, warnings are growing that memorization-based skills will be replaced by AI, so emphasis should be placed on creativity, problem-solving, and other abilities that prepare people for a world with robots. OpenAI. The company continued large fundraising, taking on an additional $10 billion and swelling to what was reported as a funding round of more than $120 billion. At the same time,